Gilbert.
How are you? Good to have you with us again here today. How are you doing today?
I'm doing great. It's always great to be back. I remember, I think one of the last ones I did with you might have been in person. So hopefully we'll get to do that again in the future. But it's great to be with you, even if it is virtual.
For sure. Yeah. So maybe we just start off by addressing the main topic here on the lithium. So you've been a lithium advocate for a number of years. I think maybe 8, 9 years ago. So when a lot of people were talking about it at that time, you're one of the sort of earlier ones to talk about it. And so how has this changed over these last so many years? Of course, everybody's talking about it, and how does this change significantly in the whole industry compared to when you were beginning to talk about lithium at that time?
Yeah, it's the whole sector, the whole dynamic, the whole theme has really changed. I mean, I founded my advisory business to focus on battery metals back in 2010, about 12 years ago now, coming up on 13 years. And back then, lithium was a byproduct. No bank was covering the space. It was very hard to find information out about lithium or any of the battery metals for that matter. And so this is the third, currently what we're witnessing is the third battery metal cycle of my career. I think one of the things that makes the current cycle unique is obviously the growth rate with respect to demand. I mean, in previous years, lithium would usually grow around 5 to 6% per year, on a year-over-year basis. And my view is that lithium demand between now and 2030 is going to grow at about 20% per year on a year-over-year basis. That would be compounded. And so, some years more, some years perhaps less. But nevertheless, what that means is if we're at around 700,000 tons of lithium demand today, that will put us at around 2.8 to 3 million tons of lithium demand by 2030. And again, just for the sake of perspective, what that means is lithium supply has to increase by about 140,000 tons per year for supply and demand to match up at that 20% growth rate. And so, the challenge, and I guess the bullish narrative here, is that supply is going to struggle to keep up with demand. And that's where you're going to get, pricing volatility, but I would say probably structurally higher lithium prices throughout the course of this decade. One of the other things that is unique currently in the current cycle relative to cycles of the past is that it's not just retail investors and hedge funds investing for a quick hit in battery metals. Most of my clients are very large corporations or private equity firms. And the good news about dealing with folks like that is they have much larger checkbooks, so they write big checks, and they're much more patient capital. So it's not like they're expecting a return in 6 months or a year or something like that. They're willing to invest for 5, 6, 7, 10 years. And that's really what the battery metal space needs as we, the whole argument, or I guess theme of decoupling from China continues to proliferate because it is going to take billions of dollars to do that, and it is going to take years. So larger checkbooks, larger players, and of course the government impulse, whether or not it's the government of Canada, the government of China, the United States with the Inflation Reduction Act, all of these, pretty substantial forces are what is behind, I think, the demand side for battery metals.
Great. And you mentioned just now about the 20% increase compared to before, 5 to 60%. Is that solely, mainly just because of EVs, that sort of demand?
Yeah, that basically the lithium ion, the battery in general, you just characterize it, I think, maybe as energy storage is what's driving lithium demand. I mean, lithium is used in grease, it's used in ceramics, it's used in glass, it's used in pharmaceuticals. But the really strong growth of lithium is going to come directly from the lithium ion battery. I would say that throughout, probably a little bit later in this decade, about 80% of lithium demand will be due to the battery business for sure, energy storage.
Yeah. So, and you also mentioned about the different institutions, the bigger corporations, so the more long term. So, what I understand, it means is not just pure speculations, meaning it's have a
not, there's always going to be a little bit of that. I mean, I would argue that you're not necessarily going to be rewarded by this is not investment advice. I'm just simply saying, in past cycles, the real wealth creation came through finding a large deposit, right? Well, quite frankly, we know where enough lithium is in the ground today to be able to supply the battery business or the lithium market for a long time to come. Of course, the challenge is building out the remaining pieces of that supply chain. And that is, I think, one of the other really interesting things here.
Great. And of course, in your early times when you're covering the lithium space, obviously in the EVs sector, Tesla's a major leader in that space. Do you see how it changes over the last few years? Does any other sort of automakers coming into your mind that are really investing a lot to be the front runners compared to what Tesla is doing?
Well, I do think that, look, Tesla was sort of, from the standpoint of Western automotive manufacturers, Tesla was really the first company to prove that vehicle electrification is a viable business. And I would probably assume that Tesla will really enjoy that first mover advantage for some time to come. That said, there is a lot more competition in the EV space today relative to what there was just a few years ago. I think the main challenge, not just for Tesla, but for the entire space, and this goes for Chinese automotive manufacturers like BYD or NIO or anybody like that, or Ford or General Motors here in North America. The main challenge is security of supply of the raw materials. Okay, it's not building a better battery chemistry or technology or anything like that. I mean, that is important, but if you're an automotive manufacturer or a battery manufacturer and you don't have a lock on, let's say, 3 or 5 or 7 years of supply of not just lithium, but nickel and cobalt and copper and so on and so forth, you really do, I think, jeopardize the longevity of your business, and you run into a situation where you may lose market share because you're not able to build out that battery capacity. So Tesla is really, I think, locked in a pretty tight race with these other automotive manufacturers that have committed to spending literally hundreds of billions of dollars just in the next few years to build out their own EV infrastructure. One of the interesting things, again, not just about Tesla, but that you're hearing a lot of buzz about, I should say, in the automotive space, is whether or not a car manufacturer, an EV manufacturer, should literally buy a mine. I personally think that's a terrible idea, because mining raw materials and purifying them and building cars or building batteries or what have you are two very, very different businesses. I think, the model for these automotive manufacturers is really to leverage what they have done to date, which is partner with mining companies through offtake agreements. Again, coming back to my original sort of point about bigger companies writing larger checks, I mean, there are some really interesting examples of automotive manufacturers, like, for example, General Motors offering, I should say not offering, but investing $650 million in Lithium Americas to help develop their project in Nevada, or Ford Motor Company loaning Liontown, which is an Australian play, a hard rock play, $200 million at a very low, very favorable interest rate. So these OEMs, rather than saying, hey, we want to buy mines, they do know that they need the raw material, and what they're trying to do is accelerate mine development through making pretty massive investments. And so I think that's really encouraging.
So along with your point, will you see a concern, let's say, there's not enough advanced, let's say, lithium mines or projects in the space for these bigger companies to say, hey, I like to do the offtake or invest. I'm not going to buy your mine, but at least I can participate earlier to sort of secure that materials. Would you see a potential issues where they run out of that, or so that more projects have to be in the pipeline to support that supply chain?
Yeah, I think, that's potentially a valid concern. I mean, we know how challenging it is to, regardless of the macroeconomic backdrop, whether or not it's bullish or bearish, I mean, it's always a challenge to bring greenfields mine supply on stream. I mean, here, as you mentioned, I'm in Washington, D.C., right, in the United States. A greenfield lithium mine project. So if I put a shovel in the ground today, from the time it went from discovery to development to feasibility to building, raising the capital and then building that mine, getting qualified by customers, getting all the permits and getting into production, it's a minimum 10 and maybe as long as a 15-year journey. And so you can't have this situation where raw material demand is going to grow at anywhere, like I said, from 10 to 20% per year across all of the metals. And it's much easier and much faster, I should say, to build the downstream pieces of the supply chain, like battery gigafactories. You could build, say, a 30 gigawatt hour factory, even here in the United States. I'll bet you could build that in 4 years. Okay, so the downstream pieces of the supply chain are much faster, quite frankly, to build for a number of different reasons. And so that's really the issue right now. And that's one of the reasons why you've seen battery metals prices go crazy over the last couple of years. It's simply because it's much easier to build the downstream pieces of the supply chain than it is the upstream. So there's a huge mismatch. And that's one of the reasons why you've seen the pricing volatility that you've seen in the last few years in particular.
Yeah, that's a good point. You mentioned about the gigafactories. And is it becoming more like a regional thing where, because the tons of being built in Asia, and is North America doing enough or building enough of these because it's become very strategic now that Asia being the front runner, and then you have the European market that you have to absorb. So is North America building enough these gigafactories here to support that?
I think so. I mean, look, there's been every week, right? For a while there was another announcement. I think the challenge that we face in North America and also in the European Union, for that matter, is the fact that the battery supply chain is not vertically integrated. You can look at a company, again, I just use BYD and CATL in China as examples of vertically integrated battery metals players. There really is nobody like that in Western markets. Tesla is about as close as you get, and they even have partnerships with a number of different companies, Panasonic being probably the most obvious one. And so, General Motors is partnered with LG. Ford is partnered with SK Innovation. And so the good news is, if we were to fast forward out to, say, 2030, you've probably got anywhere from 800 to 900 gigawatt hours of planned battery factory capacity here in North America. And in the European Union, I think it's probably slightly larger, maybe over 1 terawatt hour, maybe 1.2 terawatt hours up from where it is today. So again, very healthy demand kind of forecast, if you will. But again, at the end of the day, it really does boil down to the secure supply of those raw materials. And I think one of the ways I described one of the ways that I think that will happen, but really the way that Western players can catch up and lead is through partnerships. Okay. Because it is going to take a number of years, I think, to vertically integrate these supply chains. So you're going to see, again, more situations where General Motors and Lithium Americas or Ford and Liontown. I mean, there are a number of different examples like that I think you're going to see come down the pipeline.
Yes, and you obviously you were talking about lithium earlier, the price that it's should stay really high, or at least we see the foreseeable future probably higher and higher. And will that impact in terms of the cost wise for any of the EVs ultimately become unaffordable, let's say, or less affordable than what it
Sure.
is now?
So demand destruction, right? That's one of the things that everyone's worried about. I guess I have a couple of points to your question, Gilbert. First of all, lithium went from in late 2020, battery grade carbonate was, say, let's call it $6,500 a ton, and of course spiked ultimately to about $80,000 a ton at the spot market in China. And now that is sort of coming back to earth. I think you do want to differentiate between the spot market and the contract market in lithium. Okay, lithium I would say maybe 10% of the overall market is accounted for by that spot market in China. So just because you see the spot market price falling and falling rather precipitously in recent weeks, that does not mean that that same thing is happening on the contract side. Okay, so I think a lot of the fear or deep kind of concern about maybe lithium was a bubble and it blew up, I think that's a little misplaced. To your point about demand destruction, it's interesting because when you just think about lithium for a second, the cost of the lithium based on relative to the overall cost of that electric vehicle is maybe 12 or 14%. So it's really not material. The problem is, and this is the problem that the automotive manufacturers are all facing, is it's not so much what happens when one of my raw material prices goes crazy, but what happens when lithium, nickel, cobalt, and all of my input costs, my energy costs also go crazy, right? And that's really what we've seen in the last couple of years. And so the end result of all of that is that last year, the pack weighted price of a lithium ion battery actually increased for the first time in about 2 decades. It was only up about 7% year over year to about $150 per kilowatt hour. But again, that kind of plateauing, if you will, of battery metals prices is a direct result of the high lithium price, the high nickel price that we've seen in the last few years. And so what really needs to happen is a couple of things. I think number one, you're going to see battery manufacturers start to look either at alternative chemistries or chemistries that do not use as much nickel and do not use as much cobalt. And that has been one of the, I think, major outcomes of the recent volatility. It's that LFP, or lithium iron phosphate, is now gaining a lot more market share in the EV space relative to what, any of us thought that was going to happen a couple of years ago. So they always say, right, nothing cures high prices like high prices. And one of the solutions there is thinking about technologies, different battery technologies. Sodium ion batteries are getting a lot of buzz these days as well. I don't really think they're going to impact the EV market anytime soon, certainly not maybe for the next 5, 6, 7 years. But you could see some penetration into the grid scale energy storage market there as well. So, I think the takeaway for investors is, again, that don't get worried about pricing going parabolic or crashing. Just try to think about, okay, how can I leverage technology, or what technologies can help me as an investor hedge against some of this pricing volatility in the battery space?
Great to hear. So in terms of battery technology, you just mentioned that you follow. I guess we shouldn't worry too much that we'll have completely new materials or new chemistry that will replace, let's say, lithium as part of the lithium ion batteries in any time, near future at all, right?
I think you're likely to see, yeah, I think that's correct. A battery breakthrough. I have a Google alert set up for, I think it's battery breakthrough or battery, something like that. And every week, literally, there's a new technology. Spray painted graphene that has an endless number of cycles and it's infinitely recyclable, right? And you hear about it for about a week or two, and then you don't hear about it again, right? And the issue is because it's very, relatively speaking, you can do a lot of things in a lab. You can do a lot of things at pilot scale that don't necessarily replicate at commercial scale. And so it's sort of like any discovery that I would make today, realistically, wouldn't be, if it was truly groundbreaking and a big sea change in the battery business, you're looking at 10 plus years before it could be commercialized, right, in general. And so, again, I've always said this, I'm very comfortable with lithium ion being the standard in electric vehicles for the next 10 to 15 years, okay? It's the lightest of all metals, it holds a charge, and it has a 30-year track record of use in different environments and relative safety, right? There are no other sort of widely commercialized battery chemistries that can make that same claim, okay? So on the EV side, you will see differences in chemistry. As I mentioned before, lithium iron phosphate, I think, is going to be much, much bigger this decade relative to NMC or NCA. On the grid scale energy storage side, though, I do pay a lot of attention to vanadium redox flow batteries, sodium ion. Again, as I mentioned, it's getting a lot of press these days. But they will slowly, I think, leak into the market. They won't really crush, the lithium story anytime soon.
Indeed. So, of course, we talk about, in terms of the recent last 2 years, the major, I would say, the cloud in terms of in the investment world affecting the market, the economy will be the high inflation rate during post-COVID. Did the high inflation rate affect any of the battery metals industry?
It definitely did. As I mentioned earlier, the pack-weighted price of a lithium-ion battery increased last year for the first time in about 2 decades. And again, that was a direct result of higher raw material prices, lithium, nickel, cobalt, so on and so forth. Of course, there's a lot of volatility there now. The cobalt price today is probably below where it was a couple of years ago. But, you've seen this global economy has come out of COVID. You've had the China reopening story, of course, Russia's invasion in Ukraine, central banks raising interest rates. That more than anything has made money more expensive, right? Interest rates today are much higher than they were even a year ago, and rather aggressively. And so, I think all of these factors put together have certainly influenced or impacted the battery metals space. But again, on the other side of the coin, you have this very powerful government response globally, focused on decarbonization and focused on electrification. And so I think the battle going forward is this kind of inflationary push or this inflationary impulse in the global economy. How long will it last, and what will it mean for the space? And then on the other side of the coin, you have this push towards the greening of the global economy, right? So the Inflation Reduction Act here in the United States, all sorts of subsidies in Canada as well, focused on battery technology. And of course, the European Union has their own kind of Green New Deal or green industrial policy as well. And so these will certainly, I think, make battery metals investing very attractive for a number of years, but also could be inflationary and could add costs to the whole structure of the infrastructure.
Okay, so final question on the side note, just talk about investing. Do you actually invest personally on any lithium stocks at all for the past 10 years? And then
Sure.
Reasonable, which was your your best sort of investment that you have done on this? Just off your head, you just wanted to share with us? Or?
Sure. Well, look, I'll just caveat this and say timing is everything, of course, but I have been a longtime shareholder of Lithium Americas. I currently own shares as well. Also very interested in copper. If I had to rank the metals that I would be most optimistic about or most interested in this whole sort of energy transition, it would be lithium and copper. That's not to say that nickel isn't interesting or manganese isn't interesting or rare earths aren't interesting. They all are, because again, the demand, I think, in general is going to increase over the course of the next few years. It has to, right? It absolutely has to. And so I've done a lot of work on lithium and copper in particular. And as I mentioned before, on the lithium side, Lithium Americas, I currently own it and have owned it for a long time and been very happy with it. And on the copper side, I currently own Freeport-McMoRan. So I really like those big guys and the dividends and that whole model.
Great. It's indeed a great pleasure to talking to you, Chris, today. And if the audience has any further questions for you after the event, we can certainly connect with you with those questions as well.
That's great. I appreciate the opportunity, Gilbert, and hope everybody enjoyed it and happy to answer any questions.
Stay in touch for sure. Thank you for your time.
Thank you.